Hello and welcome to Leaders of Tomorrow Masterclass, a one-stop platform for you to ask your questions live on a national platform to India's biggest expert minds. I'm Sunanda Jaiseelan. Over the course of 20 masterclasses every Friday, we focus on one specific theme and topic. And today, we're bringing you a 2-month special of a masterclass that we did live on a digital platform talking about making and managing your money in COVID times. Let's dive right in and introduce our experts to today. First up, Sudeep Bhatia, Group Chief Financial Officer at Lending Cart; Ram Iyer, Founder CEO at Vayana Network; Nadia Sood, CEO and Founder Credit Enable; Vinay Matthews, Founder and CEO Faircent; Vinayak Burman, Managing Partner and Founder Partner at Vertices Partners. A very varied perspective that we have coming in from each of the experts today on this masterclass. The one place that you can get all of your questions answered and anything to do with how your money should be raised, what is the impact you've seen because of COVID, and what the way forward is looking like. As we do with all of our masterclasses, let me first ask each of our panelists, our entrepreneurs, to really talk about the work that they do, talk about the business models that they have. Let me start with you first, Nadia. Welcome to the show, welcome to Masterclass. And if you could, in your opening remarks, really talk about what you do at Credit Enable.
Thanks very much for having me. I'm the founder and CEO of Credit Enable. Credit Enable is a credit insights and technology solutions company, and we built a platform that lets us help SME borrowers connect with the right lender to service their financing needs and helps lenders lend more efficiently into the SME segment. So probably it's very timely to be talking also about the impacts of COVID on this segment of the economy and what we can do to help small business owners manage this very stressful time.
Vinay?
So Faircent is a peer-to-peer lending platform. We are one of the largest off-balance sheet lending business in the country. We process close to 25 to 30,000 loans, mostly to the micro SMEs. And in this process, what we do is that the money that we generate is from individual people. It's not institutional money that we bring in. We bring in large number of people coming in, funding on these borrowers. So that's pretty much the business model. It's a regulated business model by RBI. The regulation came around in 2018, and since then we're building this.
Vinayak, over to you.
I am the managing partner and the founder partner of Vertices Partners. We are a niche law firm, but a lot of special focus on private equity and venture capital. Pretty sector agnostic, so across consumer, finance, D2C, education, tech, non-tech, manufacturing, all across. And we've had the pleasure of working across different stages of capital raise, right from seed to all the way up to growth in private equity. We work with founders in a very different manner because we ourselves are entrepreneurs. And we bring a lot of varied advice on the table, and that's what makes it exciting. We've seen different scales of growth and founders moving from one phase to perhaps now several unicorns. So it's been a great journey, and we love what we do.
Ram, if I could ask you to really talk about Vayana Network.
Thanks, Sunanda, for having me on the show. Vayana Network is basically the largest supply chain finance platform in this country. We have done about close to 50,000 crores of financing, largely to very small SMEs who are part of the supply chain. And our real focus is to kind of reduce the cost of credit to as low as possible, especially for the underserved segments, less than 1% per month if we can. And during COVID times, I think we have seen a lot of stress, among SMEs. And I think what we are trying to do is to kind of figure out every single way of reducing it, at least in terms of the access to credit.
Sudeep, we've had Lending Cart join us many times, of course, here on the Leaders of Tomorrow. So, by way of opening remarks, I'm coming to you last, but very briefly, would you want to talk about what Lending Cart does?
Thank you so much, Sunanda, for having me on the show. And really, LendingCard, this is a country's leading fintech startup in the working capital space, and we have developed technology tools based on big data analysis and machine learning algorithms, which facilitate, lenders to evaluate borrowers' creditworthiness. We also have a NBFC whereby we are primarily lending to micro and small enterprises across India. So far, we have done about 120,000 micro and small enterprises. And in total, we have lent more than 6,000 crores or thereabouts.
All right. Thank you very much for those introductions. And, I want to dive right in and talk about what's happening on the macroeconomy and what the impact of that is going to be as far as the raising money and the lending scenario in India is going to be is concerned for small businesses. The World Bank making a projection as far as the Indian economy is concerned, saying that we could see an almost 2.9% upward tick when it comes to the GDP, but 8.3% is what's saying in 2021. Not really perhaps factoring in the second wave. You're looking at a third wave of COVID and the impact it's going to have. In this scenario, given that there are so many things which are uncertain, is it possible at this point to sort of do a look ahead and say, these are the factors that are going to really play out when we are talking about the domestic economy and therefore what it means and the implications for small businesses? Nadia, I'd like to give you first word on this. It's obviously very difficult at this point to plan ahead as far as an entrepreneur is concerned. Despite that, would you want to sort of stick your neck out perhaps and say this is going to be the impact for small businesses?
So planning is always difficult, especially in the absence of good information. And of course, this hits both the lender side of the equation and the SME segment at the same time, because it's difficult to forecast and also to understand risk. So I think what's really critical right now for small and medium-sized enterprises is to get that financial discipline in place if they don't have it there already. That means making sure you're documenting yourself properly, making sure you're keeping your accounts properly, making sure you're trying to do a reasonable amount of forecasting to plan for what could be downturns, and certainly start and stop, because the start and stop is what's been so difficult for people to be able to understand, how do I even understand planning from an HR point of view, from a staffing point of view, from the point of view of managing my supplier relationships, if I don't know if I'm going to be able to manufacture or be trading for at a certain point in time. So I think we haven't yet seen what the full impacts are, but it certainly creates a stress as we have less ability to plan than we did before COVID.
So this question is primarily for Sudeep as well as for Vinay, but I want to pick up on something that Nadia just said, and that she spoke about financial discipline. A lot of banks, a lot of NBFCs speaking with us say the biggest challenge when it comes to lending to small businesses is the lack of transparency in how the books are maintained, how the business is run, etc. We are, to compound things, we are adding, of course, the entire stress of COVID. Sitting where we are, what are the biggest challenges as you see it when it comes to lending to a small business? What would you like to say?
The challenge is not about data. I think there is enough and more data available today, at least in the environment that we are in.
Okay.
Data is, a commodity now. Okay. So the challenges that currently the borrowers are facing is of a different kind, right? One is that, would they have the ability to pay back? Okay. The cash flows, the revenues, completely stopped, for some time because of the COVID, and they picked it up again and they're again stopped, right? So there's a huge impact on the revenue, the cash flow, all of that is there. And the lending depends a whole lot basis your cash flows and your, revenues that you are picked up, right? In the last, couple of years. So is there a possibility of a better cash flow coming in the future? The uncertain environment is one of the biggest challenges. We don't know because we're talking about a third lockdown now, right? So they are themselves not very sure about it. Sure. There is another challenge of interest rates, right? So the government is trying to kind of reduce the interest rates, which is going to give a boost to the the growth of the sector. But there is also the other problem related to that, because people who are not really eligible for getting a loan, in case if they get a loan at a lower rate, it will be very difficult for them to in future survive in a fair market, right? That's the other challenge that all of us would be facing in the near future, right? So
Sure.
if we are not careful about that. The other challenge that I think we'll be facing is about delayed payments. So we are seeing that trend. Customers are delaying the payments primarily because the cash flow is impacted, right? So I think from a challenge by the sector as far as we are concerned, it's not about the cost of the credit. Okay, today a lot of platforms, a lot of technology has come about to kind of reduce the cost for the end customer. It's
Sure.
more about the access. Can we really reach out to those SMEs or micro SMEs which are currently conducting themselves well, conducting some part of their business, have taken them online and made it more relevant in today's environment. We'd be love to kind of fund those kind of enterprises.
Sudeep?
Basically, for the micro and small enterprises segment in India, while the government of India have a clear line of sight as well as focus to make sure that the economy goes to the dream $5 trillion at some point in time, I think this particular segment is clearly a focus area for the government, and thereby a lot of impetus as well as the push is coming from a variety of government associated projects. Having said that, I think it is still extremely difficult for micro and small enterprises to get the desired level of financing from various banks and financial institutions. Although there are various schemes like Mudra, and of which you have Shishu, Kishore, and Tarun schemes and all that. But still, I think even whatever the size of the market is so large that whatever schemes that come up with, it is still not sufficient, and there is still a lot of scope for various banks and private entities to contribute here.
There's also a huge amount of a need for financial education, I think, which is also stymieing both people's ability to access finance and also then their ability to successfully get that loan. And that has to do with not really understanding what's required of them by a lender, not necessarily understanding what type of financing instruments best for them at the stage of their business. For example, if you've only been running your business for 6 months, you may be better placed to look for equity than debt because you don't yet know really what your business model is going to look like in the future. And also what type of debt instrument is best for you. We help customers all over the country understand those things, but we do get a lot of customers who think, for example, I'll take a credit card debt instead of a term loan, which actually may be worse for them. They'll use their overdraft facility instead of securing a proper loan, which again is not necessarily the best way of financing the business. So we still, I think, need to do a lot of work on educating SMEs about how to get financing and what type of financing is best for them.
See, today, one of the largest challenges is for entrepreneurs to first understand what's the right time and who the right investor is and how do you approach. A big mistake that maybe, if you may say circumstantially, that comes into play is people generally tend to try and miss out on the aspect of the fitment. Fitment, to my mind, is an extremely important aspect because investors not only your partners truly for just the check or the capital that they bring in or the check that they sign, but it is the intangible capital that matters the most. What do you mean by that? You mean that the investors should be of such nature that they can go across and bring in certain other aspects of opening doors, adding value to the business, being able to get you the right connects, being able to try and address the bottom line through their impact. What is the impact? The impact is the ecosystem that they have. There's a lot of mixed emotion in terms of not just the consumer, how the consumer is utilizing it and spending it, but for, if I may use the word, for founders in this particular in time, it's very important for you to know that, okay, this is my business. I have a visibility. I know how I'm going to build it over the next 1 year to 2 years. Now the 5-year plan is, it's very fluid, very honestly, Sunanda, because things are so dynamic. They change with literally every 6 months. You don't know what the third wave is going to be, how it's going to bring across, what the impacts are. And therefore you start looking at people to say, who are your right partners? It's not just about sunrise sectors. It's also about, as if a founder, the team is good, the product is good, the business is good, and your partnership with the right investor is good. Beyond a point, you are going to go across and make a difference. needs. And that is something that I would urge all founders to always look at. It's not just about going and getting the first check. It's about doing that little bit of diligence and saying, beyond that check, who is my right fitment? Of course, there's a huge classic about getting the availability of those partners. But if you do, please utilize that. That's one of the key things that founders should look at.
Let's slip into a short commercial break on that note, but we're back in just a moment. Stay tuned. Welcome back with us here on Leaders of Tomorrow Masterclass. Today, we're talking all things finance, the impact that COVID has had on making your money and managing your money. I do want to talk about the role of innovation because there's been quite a bit of talk in terms of reaching those newer customers, fintech, FSI, like Vinayak was saying. But I want to take our first question coming to us from our audience member, Rachel Raymond of RRA Associates. She says she's a founder at RRA Associates. Her question is, everyone on today's panel has been talking about planning finances, but how do you plan when you don't know what you're planning for? What should a particular structure, if you were putting one in place, what should that perhaps look like? First, I want to come to you, Sudeep. It's open to everyone on today's panel, but a thumb rule, and we get asked this very often by entrepreneurs. How much of your finances perhaps should go towards, let's say, manpower? How much should be overhead costs? How should it be planned?
Extremely good question. I think to start with, of course, when we start a new journey, a lot of it goes into building the infrastructure. And therefore, at the beginning, of course, you need to come up with a path to break even. And of course, you can't rush it, because if you are rushing to a path of break even, in that case, you are actually, not investing enough in the potential idea with which you started with. And therefore, I think, so long you have a path, to a break even, and also you are besides thinking about your cost and infrastructure, I think you're also balancing on your vision and also, your real product delivery, to the marketplace. And you are able to grow at a reasonable pace. Initial phases, you can grow at multi-X, pace as well. And, over a period of time, it goes to maybe in percentages. Previously, in the initial part, it can be 2X, 3X, or even 5X. So I would say that at the beginning of the entire journey, you've got to make a business plan, which is like a minimum 2 to 3 year plan. I would recommend a 5-year plan. At least in the initial 18 to 20 months, you should first try to to establish the model before pumping the the entire foot on the pedal. And therefore, I think once the model is established, once marketplace knows you, once you have been able to establish certain number of partnerships and the data is flowing in and out, I think after that you can start thinking about how are my costs looking vis-a-vis our peers, right? How much am I spending on my payroll? How much what are the cost to income ratios are like? What whether I go to the bank, whether they are going to fund me, because in any case, in the initial part of 12 to 18 months, you got to fund the entire venture through the equity. Only after that you start to get into the debt conversations. And when you get into the debt conversation, most of the banks and any of these lenders and investors will teach you some of these things, because you have to meet certain ratio requirements, before you can qualify for a debt. So eventually, I would say that you've got to work. You've got to first build a plan. You've got to vet it through some of your mentors and your industry peers. And once you have been able to establish the business model in the initial 18-20 months, you can maybe then go on, pick up the pace and start growing rapidly.
Ram, since Sudeep was saying, debt, I want to sort of bring you in at this point to talk about debt equity ratios and what would be healthy according to you for a small business. Is there some sort of thumb rule?
I think first thing is that you should be in a position where you're getting very consistent recurring revenue if you want to take on debt. I think that's the first fundamental thing, because debt always requires to be repaid, right? And typically you got to repay it every month. So please don't take debt unless you know that you're going to get money and pretty regularly, or your parents or someone else are supporting you and giving you money, right? I mean, I think that's the first thing. The second, I think, is that equity is a very, very costly instrument to fund anything. And people don't realize that. People always think equity is pretty easy to cheap to get. So you always would want to take equity in, but at some point in time, you have to bring debt in just to ensure that your overall cost of capital is evened out.
Sure.
The debt itself comes in many forms. I mean, very, very often as entrepreneurs, we seem to think debt is only venture debt that we hear about. I mean, there's obviously the bank debt. There is a lot of market debt that one can pick up. So I think you really have to look at all your options before you decide what kind of debt you want to take. But the key really is, and I think also an answer to the previous question that you were asking, I think, if you're a startup entrepreneur, you just started today, worry about today. 5-year, 3-year plans, I think can wait. You just start worrying about surviving today, then wake up tomorrow morning and survive the next day. And then once you get customers to pay you for whatever you're offering, and, believe me, that's nothing better than that. And there's the cheapest form of capital, actually. If you can get them to pay you, then start thinking about equity, debt, and everything else that flows from it. But debt never in excess of equity, debt never in excess of what you're getting every month from your customers.
This one is coming to us from Apurva Lal. She says she's director at Ram Ashray Associates. And this question, I believe, just sums up essentially today's masterclass. Is it going to get more expensive for me to fundraise going forward?
I think it's going to definitely be more expensive to raise going forward, simply because, as we were talking about this, the level of understanding of what the future risk is going to be is impaired by the fact that we've never really gone through an epidemic like this globally before, and we don't really know what the impacts are going to be. So in certain sectors, there's sort of latent demand that's been trapped and it's going to explode afterwards. In other sectors, there may be significantly more negative impact than we even imagine. So I think what we're seeing across the board is that our lender partners, for example, are continuing to lend. They're becoming more stringent about the criteria they're using to assess borrowers, and also reducing the level of exposure they have to each individual client. So of course, if you're then looking for a 20 lakh loan, whereas before COVID, it could have been relatively easy to get that unsecured, you're now having to talk to 2 different lenders to secure 10 lakhs from each of them, and then hopefully fill your financing gap. And so all of this also takes time, and time costs money. So I think it's going to be more expensive for people to raise money, even though there are some, sectors where money is pouring in. Overall, I think for the average small to medium-sized enterprise, it's going to be more expensive.
All right, that concludes part 1 of this masterclass. On Friday, we'll bring you part 2. In the meantime, if you have any questions for us, any feedback on this masterclass, you can always send that to us at the contact details coming up on your screens as we speak. As always, stay home, stay safe. What should your balance sheet look like? If you were to say it's healthy, what should you keep in mind to ensure that your money, your finances are looking healthy?
The first assumption you have to go in now is that there's no money coming in either from equity or debt. And I think if you go with that liberating thought and focus really on customers, your products, and figure out where you're going to get revenues from, and where the costs are the only thing that are predictable in our lives, and if you can get those costs reduced, I think that's probably the best way to handle this current scenario.
I would absolutely focus on trying to reduce your costs if possible, and also digitize yourself as much as you can. It's amazing the level of efficiency you can gain in your business the more digital you become, even down to your ability to track and pressure your customers to pay you back on time, which is a fundamentally huge problem for most SMEs.
Leaders of Tomorrow Masterclass, India's largest platform where we give you, the entrepreneur, the opportunity to be front and center on a national platform, asking India's sharpest minds and experts your questions face to face. I'm Sunanda Jayasheelan. Today, we're talking about the impact that the pandemic has had on making your money and managing money and what the way forward is looking like. Let me introduce our panelists. First up, Sudhir Bhatia, Group Chief Financial Officer at Lending Cart; Ram Iyer, Founder CEO at Vayana Network; Nadia Sood, CEO and Founder Credit Enable; Vinay Matthews, Founder and CEO Faircint; Vinayak Burman, Managing Partner and Founder Partner at Vertices Partners. Obviously, very difficult at this point to plan ahead as far as an entrepreneur is concerned. Would you want to sort of stick your neck out perhaps and say this is going to be the impact for small businesses?
Making sure you're documenting yourself properly, trying to do a reasonable amount of forecasting to plan for what could be downturns.
The challenges that currently the borrowers are facing is of a different kind, right? One is that, would they have the ability to pay back? The cash flows, the revenues completely stopped, for some time because of the COVID.
This question coming to us from Alok Gupta. He says he's CEO at Pyramid Cybersecurity and Forensics. The question is, we are in a high demand industry, but the dilemma is conserve or spend on growth. The risk is if it fails, then there's recourse. And if you have lost a lot of value already, equity versus debt, always a big question.
It entirely depends on the business that you are in. If you are in the business of mask, of course, you should be spending and making a lot of money, right? But if you are in the business which is not, and you're seeing that slowdown has happened because of the nature of lockdown or whatever restrictions the government has put, you need to conserve cash and push as much as revenues you can for your organization.
Nadia, I'm going to pose this next question from our audience member, Kirti Balakrishnan, to you because we were talking about this offline. She says, as women entrepreneurs, getting funds was so difficult already. And is it likely to get even more difficult as a woman entrepreneur, whatever is the form of fundraising you're looking at, whether PVC, the capital markets, etc. What advice would you have?
Well, I think, unfortunately, in India and globally, women are still massively underfunded, both in terms of the amount of debt they can raise into their companies and the amount of equity that they can raise. There are some really positive trends in terms of data and data availability, which is allowing for, investors of all kind, whether debt or equity, to actually be able to see the business in context of a lot of other businesses and be able to determine that, yes, this business is solid, it has growth potential, and therefore I can invest into it. So I think there's going to be, over a period of time, a leveling out of this so that more women are able to access funds. But I think in the short term, COVID has also really compounded this problem, because if you look at certain sectors like hospitality and tourism, and even textiles, for example, where you have a disproportionate number of women working in those sectors, then they were disproportionately badly hit by COVID. And women in those sectors were also having to deal with all the consequences of having kids at home and taking up a lot of needing to have time to help them with schooling and things like this. So I think short term, we've already seen that it's become more difficult for women to raise money because they were in those sectors and those sectors were so badly hit. So, but what's the positive is that if you know that, you need to plan for it. And so plan for the worst, get your finances in order, like other members of the panel were saying, conserve your cash, but also don't wait to the last minute to try to secure the funding that you're going to need to keep your business in growth. You need to plan for it in advance. And it normally takes a lot longer than you think it will to raise that money.
Our next question coming to us from Riyan Sharma. He says he is a director at Sharma and Sons Associates. Are the ticket sizes of loans going to get smaller going forward? Open to everyone on today's panel.
So being a lender, definitely yes. Okay. the ticket size is going to go less. Also, to some extent, tenure also will go lesser, right? And because of that reason, I think the ticket size will go less. Because currently we don't have a horizon of how the profile of a particular customer will look like, or the business outlook, is going to look like, 1 year from now, 2 years from now, or even 3 years from now. So taking a view of 3 years right now is going to be extremely difficult. But if you have data, a strong data, if the data is suggesting something else, responding to the previous question, if you have strong data, for example, for us, women borrowers are, our lenders just lap them up, because they are so good in terms of the repayments. The data is just wonderful to see, and if you look at it, if you look at the the way it is structured, it's very unfortunate. 66% of world's working hours is producing 10% of world's income. That's I'm talking about the women, right? So they spend 66 hours but only contribute 10% of the world's income, right? They produce 50% of world's food, yet possess only 1% of the wealth. 900 million adults worldwide, they cannot read and write. So that's about two-thirds of them are women. Okay? And apart from that, the gender equality, all of that is there, right? So we don't have to kind of go to. So fundamentally, what we're seeing is that education, employment, and health is the key factor by which this can come up. And we have funded microfinance women. We have funded entrepreneurs. We have funded regular office going women. All of them are so good at paying back. They're diligent. They are conscious of the credit score. So they are well aware of it. It's amazing. So I think it's the temporary phase. It will be a little lesser amount of money you're going to get. But if you have data, strong data to kind of back it up, I think there will be enough and more opportunity for.
Okay, that's always good news, Sudeep. For those of our entrepreneurs who logged in today who are perhaps overlooking the finance role, how has the role of the CFO changed in response perhaps to the pandemic and COVID? What could you tell us? Maybe one or two things that you could leave us.
I think there are two types of financing options that we are talking about. On terms of equity, I think we have covered, some of my colleagues have already covered on the panel. It is definitely, equity is very expensive, and therefore I think at the time when you accept any kind of equity check, you got to realize that you are also diluting, some portion of your overall capital and the ownership. But at the same time, if you have a proposition, which is something to do with digital, which is something, which can be seen that during the pandemic times, also you can still be able to help the society, help the people, and your business model still is sort of conducive, which can thrive in these conditions. Of course, there can be an opportunity to do much more with your equity fundraise. In terms of the debt fundraise altogether, it is a very different cycle altogether. Of course, lenders are going to ask more and more questions. They are going to ask about your pre-COVID business performance metrics, and compared with metrics during the last year, so we now have a good track record of last 12 months on how the businesses have demonstrated their resilience, and also during the second wave as well. So hopefully, if your business is something that has been able to demonstrate a good track record, pre-COVID, I am pretty sure that with the headwinds going slower and slower, I'm pretty sure you stand a good opportunity to be able to raise good amount of debt as well.
Sure. Vinayak, very quickly, both Nadia and Vinay was speaking, broadly about some of the sectors and industries that are looking good. Going forward in terms of deals, perhaps, which industries do you think will be leading?
I think sunrise sectors are always specific in terms of situations. We've seen a lot of activity in terms of tech, and then you look at subsectors of tech. You look at fintech, edtech, consumer tech. You will see this to be sunrise sectors throughout. So that's one part. I think the larger and more important thing that's opening up now is to say that it's not just about those sunrise sectors which have these latent growth, or this, if I may use the word, the circumstantial growth that has impacted them, but what's becoming key over a point of time is the sustainability of some of the sectors. So we've actually had the benefit of looking at deals where we have seen transactions happening with fervor in something as brick and mortar as maybe manufacturing, to pharmaceuticals, to as new age as AI, bot, deep tech. We've worked across all sectors, but what becomes the key, and I don't want to go across and give an obvious answer to you, Sunanda, because very easy to say that sunrise sectors would factor in, but as long as your business, and again for the audience, as long as your business is sustainable, it shows traction, it shows that there can be a positive growth factor, it shows that it can live through a certain period of time. That's what investors are looking at. They're looking at a great business plan, a good traction, and ability to say that yes, the product is something that is not just loud about the situation of how things are now, and therefore it's great to celebrate in the moment, but it'll take a dip the moment things become normal. But is it something that can go on for a point of time? As long as those aspects are there, to my mind, those sectors will constantly attract capital, because investors are looking at good opportunities throughout to invest.
Let's slip into a short commercial break on that note, but we're back in just a moment. Stay tuned. Welcome back with us here on Leaders of Tomorrow Masterclass. Today, we're talking all things finance, the impact that COVID has had on making your money and managing your money. And I would love for the five of you to put on your entrepreneur's hat and really talk about the role of innovation. You know, all of us logging in from all over India and across the world on a digital platform like this, COVID and the pandemic really forcing us to innovate and to think outside the box. For the lending industry, very briefly, if you could talk about the role of mobile, and the role of mobile, particularly given that a lot of consumers perhaps are coming in from outside of your metros. Policy Bazaar, for instance, I know recently launching Hindi search, right? Because they're reaching out to this consumer base, which is not necessarily in your metros. Would you all briefly want to talk about something that perhaps you have seen, some trends that you think are we could be looking at in the mid to short term?
In terms of financial inclusion and the education vis-a-vis financial inclusion. So one sector where people have started concentrating, which earlier used to be as simple as Sunanda, people would say, yeah, these guys are making videos, what's the big deal? But there are companies who are now making animated content, and animated content with the intent of financial inclusion and education in absolute grassroots levels. So the ability to be able to actually traction and get that to your consumer, right? And a smartphone today, thankfully, is an availability even at the absolute grassroots level for people to be able to look at that language in maybe a sub-district of Bihar or a sub-district of Andhra Pradesh in that colloquial aspect, to go across and get that content, understand the nuances of borrowing, repayment, the essence of worthiness, what makes your credit score, how do you go across and improve it, what enables you to do things better in terms of lending, in terms of activities vis-a-vis some other aspects. For example, agri-tech, seed, how does it help? What is technology? What do you do to get a better yield? How do you get a better crop? So companies which are dealing with this sector and can perhaps try and achieve this over a large scale basis, where people can start taking advantage of this technology and drive in education at deep root level, is something which I think we'll see a huge amount of traction in the near future.
I also think that like Vinayak was saying, there's really a need for an evolution that I think we're starting to see happen away from just a pure transactional relationship with customer to an empathetic relationship with customer. And this can be facilitated through some of the digital trends that are happening, that people are so much now able to access information on their phones. You've got voice search coming up as a huge thing, but really trying to help people understand themselves, their position, assist them with their growth, rather than just looking at them as a one-time transaction. During COVID, we launched a huge initiative to provide free health checks to SMEs so they could understand how strong their business was, what their cash flows might be looking like in the future. And we did that because it's important, not just to help them today, but to try to be a partner to them for the long term. So I think we're starting to see more and more of this, and it's facilitated to get to customers at scale because of the digitization trends. But the more innovation we have around that empathy also, the more financial inclusion there will be, the better quality borrower there would be. So everybody sort of wins in the end if you approach it from that point of view.
Okay, Ram, I was looking at a piece which had been written really speaking about the role and the importance for supply chain financing, given that, if you're basing lending purely on data perhaps in 2020, 21, going into 22 is not going to be very kind to small businesses. So you perhaps have to look at other, criteria as well, collateral as well. How do you think that's really going to play out in mid to short term for small business?
I think probably supply chain finance represents one of the most viable forms of credit for in this period, because you're essentially associated with some larger credit-worthy firm, or you're buying or selling from them, and they can stand guarantee, or they can provide you a referral. And for lenders, I think those are very important things. So I think, just from an, instead of you just going out to borrow on your own strength, actually have somebody large guy, large business vouching for you. So I think we are seeing that playing out quite a lot. Yeah. I also think there is one very interesting thing is in the supply chain is also what we are actively fostering right now is group borrowing. Because, ultimately we have a lot of small businesses, whether it is 70 million, 50 million, whatever is the pick. I don't think anybody's ever done a census, right? I think a lot of them will be unable to be kind of lent to, very honestly. You will need to kind of get them together, like microfinance structures, get them together to group borrow, stand collateral for each other. Because and that's the only way to kind of make it happen. And India, thankfully, has always had clusters, right? Even before government introduced clusters, you will always have in every city, every lane is towards one kind of industry, right? I mean, so I think we have automatically kind of ghettoized ourselves in terms of, distinct areas. And if you can get them together and do group borrowing, I think that's probably one other method. And again, from there, supply chain finance is a kind of very, very useful method to do it. Lastly, I think, this whole thing about cash flow lending, which even RBI kind of went, really ballistic on in terms of their reports, in saying that that's probably the right way to do. I think with the data is becoming much more easier, easier to figure out. And again, can help industries which don't have the financial strength today. But only have something buying or selling that's happening and get money based that. So I think, we are seeing actually an explosion in supply chain financing beginning of June. April, May was tough months, but 1st of June, I think, our numbers have been off the charts. And I'm everyone I talk to is saying that, look, this is the only one that's really available to us without questions. So I think that's really what we are seeing in the market.
And given all the focus on health, I would want to go back to the theme of today's masterclass. Talk about how to make or raise your money and how to be managing it, but really saying what is healthy at this point. What should your balance sheet look like? If you were to say it's healthy, what should you keep in mind to ensure that your money, your finances are looking healthy?
Basically, in terms of at this point, cash is the king. You got to make sure that you get sufficient liquidity, irrespective of what kind of business forecast you are able to sense from the, from the market, from media, from various kinds of news channels, and also from various analysts. I think, at this point in time, you've got to stay liquid. You've got to make sure that, you have sufficient cash to, first of all, invest into your own business and, for next couple of months, because equity may be a bit more expensive. And second, even debt, the overall cycle time is going to expand a little. And therefore, I think in the broadest sense, I would really encourage all the entrepreneurs to ensure that, they keep sufficient liquidity and, while conserving maybe some of the expenses and at the same time trying to maximize whatever, market opportunity you have at this point in time.
Okay. Ram?
Yeah, I think, the first assumption you have to go in now is that there's no money coming in either from equity or debt. And I think if you go with that liberating thought and focus really on customers, your products, and figure out where you're going to get revenues from, and where, the costs are the only thing that are predictable in our lives. And, if you can kind of get those costs reduced, I think that's probably the best way to handle this current scenario or in the foreseeable scenario. I think if you get equity, preserve every dollar of it till you can. If you get debt, be very mindful of the cost and make sure that you have somebody giving you money every month to kind of repay it. But ultimately, I would just say, prudence. I think we have all got to a point after 13 or 14 months now to realize that we are not actually in the midst of very binary events, right? I mean, it's done, it's over. We can't say that. I mean, it's just going to be probably a continuing saga, and therefore one has to kind of assume that any point in time, whatever money we have left is the last money that we have.
Nadia?
Yeah, I would absolutely focus on trying to reduce your costs if possible, and also digitize yourself as much as you can. It's amazing the level of efficiency you can gain in your business the more digital you become, even down to your ability to track and pressure your customers to pay you back on time, which is a fundamentally huge problem for most SMEs. Make sure you balance your customers out between customers who pay on time and the bigger ones who might cut you a larger check but have a very long repayment cycle, and look at how you can really grow the elements of your business that are succeeding. Is there an opportunity because of COVID to make a small shift, to be more empathetic to your customer, and to actually just accelerate your growth?
Never easy being an entrepreneur, more so than now, I would presume. Vinayak, I'm going to give you the last word.
I think, I would go down to only one fundamental element. Today's world, to survive is to thrive. So focus on surviving. When you say surviving, the most important element is you have to take each day as it comes. So one of the thumb rules, which I believe as an entrepreneur is, the most obvious becomes the least obvious. So while we all have nice aspects to factor in, different aspects to build in, the most important thing today is to take each day as it comes. Figure out the best way to go through this situation, hunker down, and ensure that the key elements of your business stay positive. People that matter to you, you hold on to. Have partners on the cap table who support you. Have partners off the cap table, even as lenders who support you. Your team really matters, because as an individual, as an entrepreneur, and I can tell you as an entrepreneur, you are so much as you are as an individual. Your limitations are there. You can only go across and pierce and go through when your team is phenomenal. So hold your team strong, get the positivity in mind. Right now, the only way to go about is to go through this positively and say that, yes, you will be able to scale through this. You will be able to pass through this time. Focus on ensuring that you build the pedigree of your business, the quality of your product. Try and figure out those loopholes, what you perhaps let go of earlier, the rigmarole of scaling. So right now is an opportunity for you to look back and say, what can I do to make my business better, my product better, my clients happier, my customers happier? As long as you focus on that and survive this space, you will thrive. Because for today's world, the moment you survive, you thrive. So
okay, thank you very much to all five of you for joining us on today's masterclass. Plethora really of and a wealth of experience really coming on today's masterclass. Thank you so much for taking the time. That wraps up part 2 of our Leaders of Tomorrow Masterclass, talking about the impact that money has had thanks to the COVID crisis. If you have any feedback for us, you can always send that to us on our details coming up on your screens as we speak. Thanks so much for watching. Have a good night.